Well, hello and welcome to the European Fund Classification webinar. We're delighted that so many of you can join us today, whether you are well versed in the European Fund Classification system or not. This may be very new to you, so you may be wanting to find out more about the classification system, but we hope that there's something for everyone today because it's a great opportunity to update you on new developments, but also to take you through the classification process and to hear from some users today. My name is Miranda Seath and I am chair of the European Fund Classification Task Force, which is the forum that is run by EFAMA to oversee the European Fund Classification System. And I'm also Director of Market Insight and Fund Sectors at the Investment Association, which is a UK trade body for investment managers. So just to give you a bit of a sense of the agenda today, we're going to do a quick introduction from me to the EFC, and then I'm going to hand over to Thomas Tilley, who's Senior Economist at EFAMA, who'll take you through the system and talk about recent developments. And there's been some quite significant progress in our classifications. We'll then hand over to FE Fundinfo, who is the classification administrator, and they'll talk you through some of their perspectives, but also how you can actually get your funds classified. It's going to spend some time on that. And then we'll go through some of the experience from industry users. So we're really delighted that Wellington, Nordea Bank, Legal and General Investment Management, Credit Suisse and Assogestioni are joining us to talk through their experiences. And I think that's going to be an incredibly valuable session. But we do also want to hear from you. So there is the opportunity to post your questions in the chat function on WebEx. So we'll be taking questions at the end. We won't be taking questions throughout, but please do post your questions in the chat as you think of them. And if you could address them to all panelists, that would really help us because it means that everyone can see the questions that are coming in. So I'm really looking forward to hearing from you as well, because this is a great opportunity to get those questions answered. But let's start by giving you a short overview of what is the European Fund Classification System and why is it important. So it was developed by the EFCF, which is a forum from EFAMA, and what differentiates it is that it's a pan-European classification system. So it's designed to appeal to investors, but also the wider European funds industry. And it allows investors and fund groups to find and compare similar peer groups of funds, but in a meaningful way. We think this is particularly relevant in an era where cross-border fund sales are rising. And what this allows investors to do is to compare funds on a like-for-like basis, but across different European jurisdictions, not just on a national basis. So it's increasingly relevant. And we do have a vision, of course, and our ultimate vision is that we really want to create a truly pan-European classification of investment funds. And not only is it important that it's truly pan-European, but it's really important that it's supported and recognised by fund managers, as well as the distributors, data vendors and national associations who use the system. We do actually get a lot of questions about why should we use the European Fund Classification System? What sets it apart from other classification schemes that you may or may not use? So I'm just going to spend a little bit of time talking about why we do think it's different and why it could be a really valuable classification scheme for you. So the first point that we like to stress is that it's a system set up by fund managers for fund managers. So that's unlike many other classifications. So it's completely owned and managed by the fund industry itself. And there are no single commercial interests at play here. So it is really, that does set it apart from some of the other systems that you may use. And that's what the task force is designed to do. So the task force is made up of some of the national associations, but also fund managers, and it oversees the development and evolution of the categorization system. So what it's designed to do is to give input, but also make sure that it reflects how the market is evolving. And it meets 4 times a year. So that's really important that oversight. And that is part of EFAMA, as I said. So I'll be passing over to my colleague Thomas in a moment, and he leads from the EFAMA side on that task force. In terms of the classification system, there's well-defined criteria. What we're trying to do is allow a simple like-for-like comparison across funds, and it's very transparent. So you can go to the EFAMA website and download the EFC brochure that's publicly available. If you want to be signed up to our list, our mailing list, because you'd like to understand about classification developments, or you'd like to kind of get a subscription to data feeds and things like that, please just let us know. But everything is in the public domain. And that transparency is really important. So part of the process, which we're going to hear more about from FE Fundinfo, is actually getting your funds classified. So it's really important that we do that in partnership with the fund group. So, and I won't steal FE Fundinfo's thunder, but just to give you a bit of a flavour about that, fund groups provide their holdings to FE Fundinfo, who are completely neutral classification administrator, and they do the classification, and they have very transparent, well-defined criteria which they will talk you through. But it is really important to us that you as fund groups are involved through each step of that classification process. There's also a review, so we review those classifications on a quarterly basis, and that's really to reflect the fact that funds do reposition themselves. You know, there may be occasions where they might even move across you know, a criteria, but it's really to make sure that this is a kind of dynamically managed system and that the classification results are up to date. But well, it may or may not be the most important thing, but it is another really important point. This is free to the industry, so we are not making any kind of commercial gain from this system. So it's free to get your funds classified. It's free to see the results, and as we said, the data is publicly available. And I think that's really important, just to stress again that this is not something which is driven by commercial considerations. It's very much driven by what is best for the investor and overseen by fund groups and associations. So it's been a real privilege to be involved as chair, and I'm looking forward to hearing more from the other panelists today who are going to take you through some of the developments. So I'm now going to hand over to Thomas, who's going to talk you through some of the basics about the European Fund Classification System, recent progress, and most importantly, how you can get involved.
Thank you very much, Miranda, for this kind introduction. Indeed, so we're going over the basic recent progress and how to get involved. I will have a little bit of repetition of the key points you already stressed in your introduction, but I don't think that's bad because it does highlight what makes this classification so unique. On the basics, European fund classification is a pan-European classification system allowing users to find and compare like-for-like funds. And as you already said, it's set up by fund managers for fund managers. Unlike any other classification, it's owned completely by the fund industry. So the European Fund Categorization Forum task force is a task force of EFAMA, and it steers the direction of travel. Why was the EFC set up? It's already been 12 years now, I think, about 12. It's because in a area of rising cross-border fund sales, where UCITS are sold increasingly across the world, there was a clear need to compare funds across different jurisdictions, making sure we compare like with like. What is our target audience? So the target audience of the EFC is professional users. It's fund managers, but also distributors, data vendors, the whole ecosystem of the fund industry. We are not targeted specifically towards retail investors. That doesn't mean a retail investor isn't free to look at the classification results. Everything, as Miranda mentioned, is freely available. They can look, but this is maybe a twinge too complex for the general retail investors. Also, when they will see the list of funds in a certain category, that doesn't mean they'll be able to purchase these funds, of course. Some of them are only targeted at professional investors. We have two types of classifications. One is the verified classification. This is the holy grail. Fund managers provide their asset holdings of their fund range to the classification administrator. So that's FE fundinfo. Then the classification administrator classifies according to transparent and well-defined criteria. And as Miranda mentioned, they are in the brochure. You can easily look them up. And what's important is that fund managers, fund houses are involved in every step of the way during this classification process. So it's really a very transparent process where they really get feedback and they can give input during the whole process. These classifications are reviewed on a quarterly basis to make sure that the fund adheres to its classification criteria, and sometimes indeed it switches strategy. And again, this is completely free for fund managers. It's completely free of charge. We have a second classification, which we call the indicative classification. And it's sort of a stepping stone towards the verified. What happens there is that the classification administrator does some sort of a temporary classification without interacting with the fund groups. They do this by looking at prospectuses, the kits, fund names, to give sort of an indication of what the fund classification could be. And the aim is that this sort of will stimulate fund groups to actually move forward and have their funds verified to a verified classification. So they work sort of as communicating barrels. What's the main structure? We have 6 main fund categories: equity funds, bond funds, multi-asset funds, money market, Harris funds, and then an other category. And those are further split according to 9 different criteria. So we have a regional or country breakdown, sector, market cap, currency exposure, credit quality, interest rate, emerging market exposure, asset allocation, and some additional elements. Of course, it depends of the main type of fund, what the further breakdown is. Equity funds are further broken down into country and regional breakdowns, whereas bond funds have more of a currency exposure or an interest rate exposure. Which funds are in scope? Well, the scope is all European funds, UCITS and alternative investment funds. ETFs are also included, and they're now separately identified. We also have a very small number of non-European funds in there. Why is that? Because often we have fund houses, fund groups that come with their entire fund range, not just their European funds, but entire fund range, and have it classified. But those can be easily identified in the classification results, and you can easily them out. Where can I find more information? We have our brochure. Miranda already mentioned it. It's available on our website, and it sets out all the different classification criteria very clearly. Where can I find the results? They are freely available also on our website. The link is here. It's in an easily accessible Excel format. It's updated every quarter. For users that make heavy use, it's possible to receive bespoke feeds. For that, you need to contact FE fundinfo. And this is a warm call to everybody, all interested parties, platforms, data vendors. You can make use of these classification results to connect it to your own applications, to integrate them in your systems. This is freely. This is a tool for the European fund industry to use. As Miranda mentioned, we made quite some progress in recent years. How have the categories and data fields evolved? Well, this is a continuous process of adjusting the categories to reflect current market evolutions and new regulations. So I've just listed the past 4 years. In 2019, when the money market fund regulation came into play, we changed the definitions to now reflect VNAV, LVNAV, and public debt CNAV, adjusting to the current regulation. In 2020, we made some changes to the bond fund categories. We added a flexible duration category and an unspecified. We introduced mortgage-backed bond funds as a new category. And we added investment teams in the equity funds. So these are teams like water, clean energy, and so forth. And this is like one of the new trends we've seen emerging in industry, these thematic funds. 2021 and 2022, we added ESG information. As you all know, SFDR came into force. So now you will find definition of Article 8 and 9 funds as a separate flag in the EFC classification results. We also have ETF information, so it's a yes or blank field indicating if a fund is an ETF. Since this year, what we introduced is now also the type of usage directive. So you can see if your fund is a UCITS or it's falling under the AFMD, and a separate flag. And what we're currently working on is a revision of the list of investment fund teams, because this is a rapidly evolving field. So we will be adding a few more teams, mainly on the social funds. Were there any milestones in the expansion of the coverage? Yes, this is actually the main reason we're also organizing this webinar today, because this month we massively expanded the coverage of the indicative classification. We now have an almost complete coverage of all funds in 3 of the largest European countries. We're almost completely covering France, Italy, and the United Kingdom. This is in cooperation also with the IA, where we take the IA sectors classification, and of course in cooperation with our national associations in France, AFG, and Assogestione in Italy. In total, we added almost 27,000 new share classes to the classification. So what does the future hold for EFC? We will continue to expand our fund coverage by mapping where we have data gaps, and then reaching out specifically to fund managers, trying to convince them to have their funds classified. Or at the first step, we often try to do an indicative classification. And we want to also stimulate further use of the classification results. So we'll be in contact with some of the major distributors. We already have some contacts, trying to spur more use of these classification results. How can you get involved? This depends on who you are as a listener to the webinar. We identified 3 main categories. If you're a fund manager, fund group, and you're convinced that it's interesting for you to have your fund range classified, contact the classification administrator, FE fundinfo. The email address is there. They're very responsive. It's a quick process. You'll see some testimonials later on. Get them, and they will get back to you and guide you through the process. If you're a national association or an EFAMA corporate member, and you're interested in steering this process, steering the direction of travel of the EFC, apply to join the task force under the leadership of Miranda. Contact the EFAMA secretariat, and we're always interested in having new fresh views here. If you're a user of the EFC, be it distributor, platform, data vendor, even academics, and you're interested in helping to improve the user friendliness, the coverage, the categories, we have an EFC user group where we reach out to the main users and have once a year a contact meeting with them where they give their feedback as main users, and we take that on board and we try to guide the way forward thanks to the input of our main users. That's it on my side. If you have questions, don't forget to post them in the chat.
Thank you, Thomas. And it might also be good if you could put your own contact details in the chat as well, just thinking about people want to contact you about the Secretariat. So that's an excellent presentation, very nicely setting us up for the rest of the agenda. So I'm now delighted to be joined by FE Fundinfo. So we have Robert Botha, who is Head of Operations at FE, Xavier Colazzi, who's Head of Portfolios and Classifications, and Klaus Jorgensen, who's a Senior Consultant, and they're going to give us some perspectives on the classification scheme. So over to you.
Thanks, Miranda. Thanks, Thomas. Great introduction. So, hi everyone. My name is Rob Botha, and I'm Head of Data Operations at FE Fundinfo. I first came to hear about the classification back in 2016. And the idea of an industry-owned standard was really interesting. However, at the time, the coverage was fairly limited. So we decided that we should get involved alongside the task force and Fund Connect and help promote it to build up the coverage. So it's a different story today, as Thomas was explaining, and I'm here to talk on behalf of FE Fundinfo, the classification administrator. And on the next slide, we will just see some detail that we're going to run through. So we're going to cover the philosophy and key principles, the growth journey and strategy, the value to market, and then I'm going to hand over to my colleague Xavier to run through our role as the administrator, the classification structure, the classification results, and then a recap and summary of the benefits. So on to the first slide. So here to talk about the key principles. Now, Miranda and Thomas had already explained some of this, but to re-emphasize, it's the EFAMA EFC is an industry-owned standard. What does that mean? Well, it's truly neutral and independent. There's a dedicated task force who meet regularly to define the structure and review new initiatives and market feedback. The classification is also recognised by the Open Fund Standard, which encourages efficiency and availability of data exchange. Secondly, the classification is free and transparent. So as the administrator, we don't charge the fund groups to get the classification. And we also produce the classification on the EFAMA website free of charge as well. So the data, as I say, is readily available on the EFAMA EFC website to download. It's also available in FE Fundinfo feeds as well. And thirdly, a key principle is data quality. Now, this is really a core focus. So FE Fundinfo, as the administrator, have invested resource into a classification team, and we've built a processing system to generate the classification. There's machine validation in place to capture any breaches when comparing the holdings to the classification result. And any discrepancies or suspicious outcomes we engage with the asset managers to sign off the classification. Our team, as Thomas mentioned, also research the fund's objectives and other key characteristics and apply an indicative classification. And this indicative classification is used as a kind of stepping stone towards the verified, but it can also really be used as a quality comparison to make sure that the objective and the portfolio results are correlating with each other. So those are really the key and core principles and philosophies that the EFC is built on. So on to the next slide. And again, as kind of echoing what Thomas had already said, the coverage of the classification is really important to create meaningful peer groups and comparisons. So as you can see, where I mentioned back in 2016-17, the coverage was fairly limited. And over the years, there's been a steady increase to take us to today's significant coverage of over 115,000 share classes, which is 26,000 funds and from over 1,000 fund groups. So this really means that there's extensive coverage for cross-border comparisons and UCITS funds. So we continue to grow and have identified markets and fund groups who haven't engaged, and the task force encourages active participation. And you know, as Thomas said, recent market additions just this year for the UK, France, and Italy, and there's continued onboarding activity. So we see through the timeline the kind of journey that's helped us achieve this coverage, and now that Funds 360, Fund Connect, and Fund Square have all joined the FE fundinfo family, and we continue to support and the initiative, then we just see this opportunity to grow and achieve European, but even beyond and global coverage for the classification. So on to the next slide, we think about the value to market. Now, whilst there's value in a lot of value in the design and structure of the classification system, and it's become a recognised standard in the industry, and the results are also free to access, as we've said, and there are other data points in the results, such as the investment themes and characteristics and so on. As well as this, we now see, due to that significant coverage, that the quality of the system, that we can combine with the extensive FE fundinfo data to produce the performance information that you can generate with peer groups, which is benchmarks, ratings, ratios, rankings, really across a broad range of peer groups and cross-border funds. And this is all to help aid quality fund selection for investors. So it's taken some time for the classification to reach a point where these meaningful comparisons can be made, and now we're at this point. It would be a really exciting next step. So thanks for giving me the time to talk today and the opportunity. I'm going to hand over to my colleague Xavier, and I believe we'll have time for some questions at the end. Thank you.
Thank you, Rob, and good morning, everyone. The role of FE fundinfo as the classification administrator is, as previously mentioned, to produce the classification data, both on the indicative and the verified. So the indicative data is based on a fund's investment objective as stated on a prospectus or a fact sheet, and the verified is obviously based on the full holdings of the fund. Another function of FE fundinfo in this initiative is to make sure the data is made available freely to the market by publishing the data on the EFAMA website on an ongoing basis, and also by making the data available in bespoke feeds to data vendors or any interested party that wanted to receive the classification results. And last but not least, we engage from A to Z with the fund groups willing to become classified during the entire onboarding of their data. And we wanted to insist a little bit today on this engagement to explain how FE fundinfo can help getting your funds classified. So typically, the initiative and the request comes from the fund group. So just send us an email. We'll set up a meeting, and all we need is it's pretty simple, is one, your full portfolio holdings for the funds that you want to classify. And here it is completely up to the asset manager to decide the format that they want to use. It can be an internal full portfolio holdings format, it can be open funds, it can also be a TPT. So on the one hand, we need full holdings, and on the other hand, we will need a static data file in order to make sure the funds are correctly and accurately listed in our systems. And this file, again, very simple. It contains very small and basic elements, such as the ISIN code, the umbrella name, the subfund name, share class name, hedging currency. So these are the very basic elements that we need, but obviously we can accommodate. So we're happy to receive more data. We will see later that the classification allows more granularity with more characteristics. And so if we can receive any ESG related data, any ETF, UCITS, we're happy to receive that. And obviously, once we receive this information, we produce a first classification, and it has to be approved by the fund group. So again, the results are owned by the industry. And once the classification is produced, we send the results back to the asset manager for validation. The results can be challenged, discussed, and there is no publication until we come to a full agreement with the fund manager. And as Rob previously mentioned, in order to support this initiative, we have a dedicated team of classification experts reviewing adherence to the classification on a quarterly basis when it comes to the verified classification. And the team is really happy to assist with, well, onboarding your funds. So typically, if you contact us, if you want to have your funds classified, we will send you an invitation to a 20-minute meeting where we will discuss the data requirements, and we will make sure to provide the methodology support and a detailed procedure, which you can also find on the EFAMA website currently. And again, we can also help, and we're happy to help on dealing with any confidentiality aspect, any NDA aspect. And here again, we're happy to use different sorts of formats. We can use either a fund group's NDA, or we can suggest that you use a proven EFAMA template NDA, which is also being used by the industry. On the next slide. On the next slide is an overview of the classification structure. So as previously showed by Thomas, the investment fund universe is broken into 6 main categories, which are then segmented according to 9 categories, such as country, sector, market cap. But also what makes this classification unique is that it supports additional categorization elements at the bottom of the tab here. And these elements really are typically, is the fund an ETF? Does the fund follow an ESG policy, which the data is based on SFDR Article 8 or 9. Also worth mentioning that the classification supports all types of funds. Funds classified according to the UCITS directive or the AIFM directive. So very flexible and complete classification. And also what differentiates this classification is, which something you can see at the bottom of the slide, is that we have 17 investment teams for equity funds, which are used to classify equity funds that invest a large part of their assets in companies belonging to these teams. I now let my colleague Klaus Jorgensen take you through into more details into the classification results. Thank you.
On the slide, you see an example on the publication that we do on the EFAMA website. It's hard to see it, so what I'll try to do is to go into the investor mode, if you can say it that way, and try to go through a decision process that may apply to an investor looking up funds to invest in via the classification. As has been mentioned, we have quite a lot of categories, we have quite a lot of additional elements going and forming the classification. So it may be difficult just to have a quick look because we cover a lot of different share classes in lots of funds and fund groups. But if I can share the screen, I'll try and go through it. What you see on my screen now is one of the elements in the classification covering equities. We have an Excel sheet within the classification published that shows you on each of the top categories the classification that we have. Here we concentrate on equities, but at the bottom you can see the different tabs that we have in the sheet. We cover bonds, multi-asset, money market, RIs, and other funds as well. But let's focus on equities and let's try and look at it, we'll say, with an investor perspective. An investor interested in trying to narrow down the classification information and to support a possible investment in a fund. The first decision to be made, because when we talk equity, we cover close to 50,000 share classes, and that's impossible for any investor to look through. We have the indicative and we have the verified classification. So one starting point could be that I am an investor. I want to invest in an equity fund. I have a desire to invest in a climate fund. That's a relatively new way of trying to invest. So what I have a preferred interest in is to make sure that the fund live up to what it states to be. And in the verified classification, which is reviewed every quarter, you have the best possible way to make sure that the fund live up to what it should. So let's remove the indicative classification from the sheet and only look at the verified classification. It still covers quite a lot of funds, some 20,000 share classes in total. And again, it's too much to look at. But I know I have an interest in a climate fund, so let's use the investment theme that we have and remove any fund that is not themed as a climate fund. That reduces the number of share classes I have to view dramatically. We have now, on the verified side, 168 share classes left that I can invest in. What I want to do now is to make sure that the funds I invest in are comparable as much as possible. So the first step I would do is to say, okay, I want a climate fund. I want, personally, a global climate fund. So we remove any share classes that are not global. And that we can do in the tab called categories. We are left with some European funds and sector fund, and only leave the global funds in our decision possibility. Now we are down to 137 funds. I want to make sure that my fund live up to the usage rules. I don't want a fund that may be geared, leveraged to any extent. It has to have the characteristics as a usage fund. So I will only concentrate on usage funds, narrowing it further. And then let's say I'm a person that are committed to the ESG world. So I will make sure that the fund uses the ESG sustainability objectives and ESG characteristics, Article 8 and 9, in the process of investing in the companies. We are faced here with the reality that all usage funds in this theme has an ESG classification. So I have now 130 share classes to choose by. The 131 share classes consist of only 10 different funds issued by 8 fund groups. So now we are in detail better off in trying to select the fund we want to invest in. We have HSBC funds, quite a lot of them. We have Amundi funds, quite a lot of them. And we have different fund providers left in the sheet. This is a way to make sure that what you invest in is represented by share classes that as closely as possible live up to the purpose they have for their investments. You cannot here see whether you can buy them or not. That has to be a further lookup that you have to do. Is the fund investable for private investors or professional investors, and so on. One thing you can do is that you could introduce the ETF test. An ETF is an exchange traded fund, makes it quite easy to invest in the fund. As you can see, not many of the funds here are ETF funds. There is only one fund group that, as we can see it, and we have information about, has ETFs in that manner, and that's Amundi, with 2 funds only to choose among. But again, the decision to invest is made easier by introducing the different classification elements that goes into the classification. I think we should go back to the presentation now, just to make a short conclusion. And you have heard it a lot of times up to now in this presentation. But again, it is important features that we are proud of anyway. We are independent. We are owned by the industry. We have no bias when we do the classification. Our main focus is to have a classification model that is consistent and is up to date and as closely aligned to the way investments are made in the fund groups. It's free of charge, so we do not have money involved in the way that we classify. And then it is flexible for the fund groups. It's flexible because we do not do a verified classification on our own. We involve the fund groups. They are part of the classification from day one. Thank you.
Thank you very much, Klaus, Xavier, and Robert. That's really useful and particularly to see, you know, a lot of that detail about how you can actually use the system and get your funds classified. Just to say, I noticed that someone's put their hand up to ask a question. The best way to ask a question is to post it in the chat, and if you could address it to all panelists, we will take questions at the end. So please do that. Unfortunately, you can't speak if you are tuning in, so do put it in the chat. But now let's move on. And I noticed Wellington funds were trailed in that example. So I'm really delighted that we're joined by Stuart Smith, who's the Global Fund Data Manager at Wellington, to talk through some of his experience about using the classification. So Stuart, please.
Thanks, Miranda, and thanks to all the speakers so far. I'm just going to take over the screen. So just to introduce myself, and I'm Stuart Smith, Global Fund Data Manager at Wellington. I'm going to talk about our perspective as an asset manager and how we've evolved over the years and built up a relationship and getting our funds into these EFCs. I deal predominantly with funds that are sold cross-border in Europe and Asia, and I work with a lot of the data vendors where our funds end up in different platforms, and some of the vendors, global, like Bloomberg, Morningstar, Lipper, and so on across Europe. We have a lot of data that goes out. There's probably millions of data points. There's also a lot of documents. I work on how we get the plumbing out of the Wellington into the market, how we control some of that information. And I'm also involved in regulatory templates like the FinDartex templates, EMTs, EETs, EPTs, and so on. And then more latterly, becoming closer to how our funds are rated by different rating agencies and also classified in different ways by different industry bodies. So I'm familiar with the UK IA initially, with Miranda and her group, and then in recent years we've become more engaged with the EFC. So moving on, just to re-emphasize some of the points you've heard, but why is it important to us as an asset manager? One of the initial sparks of interest came from talking to our distribution partners. We know that they analyze fund offerings within the EFC framework, and some of those actually might have operational templates where they're exchanging data between managers and themselves, and this is one of those important fields for them. We actually came about the EFC from an event after that interest from some of our distribution partners in Stockholm back in 2018, and we met Fund Connect back then, Carsten Mahler and co. And then there was also representatives from Open Funds talking about how the industry can exchange standard data. So we engaged with Fund Connect as a verification agent back then, obviously now part of the FE fundinfo group. So now you've got other contacts like Rob and Xavier. But it's interesting to note that the EFC is complementary to those other schemas. So the UK IA as another industry body where our funds appear, but also there's the ones that you know and love like Morningstar and Lipper and so on. The fact that it is complementary, it's cost-free for the market and it's fully transparent is obviously very important. So just a brief timeline of how we sort of built up our scope of funds within the EFC after Q4 2018. We started engaging with our clients to understand, the importance of the EFC, and then we decided it's something that was definitely beneficial to go for. So we engaged with Fund Connect, FE fundinfo, testing a holdings file, and this was actually very straightforward. We got to agree on a template that we were used to using with other vendors, and they were very open to that kind of format, so there was no problems there. Our scope started fairly small. I think we started with some of our European equity UCITS funds, and then, as Xavier mentioned, the first phase is starting to supply that data and then FE fundinfo will give you an indicative rating classification, and then we work with our product experts on our side to then agree what's that final verified classification going to be. And then as we move through 2019, we just added more funds into that scope. It's a very simple process. Once you've done it for one fund or group of funds, adding in more funds into that scope, you know, it's very simple because you've got all the plumbing already in place. And then more latterly, we got up to probably about 75 funds that are now within that within the schema. And some of the other things that are interesting to hear from today is how the coverage is expanding. So, you know, it's not just equity, fixed income, multi-asset. It's other tags like UCITS, SFDR, and so on. And just to recap, you know, why is this important? Why should asset managers be thinking about this? It's not only important for us, it's important for our clients and European distribution partners. It's very straightforward. So talked about that the holdings template process was pretty simple. The NDA process, Xavier mentioned NDAs, that was also pretty straightforward for us. I think we worked on a format that Wellington was already familiar with. Connectivity with FE fundinfo was beneficial for us. They've got our data already, and you could potentially use that for other purposes, things like open funds, dissemination, and so on. The expanding universe is obviously important, and I think some of the points like Rob was talking about, this could potentially be an additional benchmark measure when you're doing peer analysis. So if you think about something like the UK IA is another benchmark within FE Analytics, for example. I know that Wellington funds have really benefited by being more transparent and visible on UK platforms. And we really are expecting and hoping to see the same kind of expansion in our footprint by being involved in the European fund classifications. So I will stop there and hand over to, I think, Brian, who will be next.
Yes, thank you, Stuart. And some really interesting points there, which would be good to pick up in questions, I think, around benchmarking. But I'm now delighted to introduce Brian Castledine, who's the expert product owner at Nordea Bank, based in Stockholm. So, Brian, over to you.
Yes, thank you. Hope you can hear me all right. Yeah, just go on ahead to the next slide. That's just a bit of an introduction one. Yeah, so I work in Nordea in one of the core. As you know, I saw it as a way to classify our investment funds and exchange traded funds, because the old way we had was not so reliable. And I can say since then, I mean, it has proven to be very reliable and a very good way of classifying these products. I think we've only ever had a handful of times that a classification was maybe wrong, and it was one of the indicative ones, which is a good argument to, you know, try to get them verified. So it's been very good for us. It is now our primary piece of data we use to classify the funds and ETFs, and we get the data in a daily file. So usually the products are already in our database, but are not fully classified yet. So this file runs, and then we get one of the 6 classifications. I think yeah, we already had all of these classifications, so it was actually a very perfect alignment. We just called multi-asset balanced and RS alternative. But other than that, the classifications we had were one-to-one with it. So it was a very easy adaptation for us. You know, and why this is important. I mean, there is a lot of things that have sort of, you know, that come after the classification that are very important. Obviously, advice towards our customers is probably number one. You know, you want to, you know, offer a product. You want to know what type of product it is. That's quite important. Or maybe customers are interested in certain types of funds. So another really important thing that we use it for is our reports. We have yearly reports, quarterly reports, and it's really important to know what type of product it is from I guess a regulatory perspective, and also from a customer perspective. If we, you know, send reports with incorrectly classified products, it doesn't look very good for us, and it's not a very good customer experience. So it's really important that that basic classification is there. We also use it a lot in analytics. We have our analytics team, so I mean they're doing a lot of reports for various areas of the bank. You know, we get asked a lot, like, oh, can you give me a list of all of Nordea's equity funds or bond funds, etc. So it's quite important internally as well for a lot of analytics. It's also important with cost estimations, for example. There's a MiFID II cost estimation where you have to provide the customer with the, you know, an estimate of what they will pay to purchase a fund, for example. And the fees can vary, brokerage fees for courtage, as called, based on the, you know, type of fund. So if you are selling a bond fund to a customer and it's misclassified as an equity, or the other way around, you may be showing the wrong cost estimation to a customer. And in that case, that can be a breach of the rules there. So it's very, very important for our cost estimations towards our customer. Very bad customer experience as well if you show them one cost and they pay another, of course. Right? And at the base of all this also is we have a lot of data governance. So checking that instruments have critical data points to be sold to our customers. So this very basic, you know, the first step of saying, yeah, this is an equity fund, this is a bond fund, etc. It's critical to data governance, that we know what type of instrument it is. A lot of things will fall apart if, you know, that very basic first step is not in place and not correct. So it's very key to a lot of the processes in Nordea. And yeah, generally, you know, we're quite happy with how, yeah, the data has, you know, improved since we adopted using the EFC. So yeah, all in all, a very good change, and yeah, we will continue to use it.
Fantastic. Thank you very much, Brian. It's great to hear from you. So we now move to Rory Loader, who's actually an ETF operations specialist, so giving an ETF perspective, and he is from Legal and General Investment Management. Rory.
Thanks very much, Miranda. Yes, as Miranda mentioned, I am an ETF operations specialist working within LGIM ETF portfolio management and operations. My history with EFAMA and the ESC process actually dates back to my time as supplier relationship manager for our strategic data partner at the time, Fund Connect. I was approached by our head of product to scope the process for classifying LGIM's European domiciled fund ranges under the initiative. In very simple terms, the main driver for classifying our funds had been feedback from our international distribution team and our regional sales teams, where clients and prospects were telling us that they actually couldn't find our funds on the EFAMA portal. The natural conclusion that we drew at this point was that we were missing out on opportunities to grow AUM at a time when we as a company were actually looking to increase our reach in Europe. So in a sense, it was really a no-brainer to look to classify our funds under the initiative. So once I had been given the remit to start classifying our funds, I had a very good working relationship with Fund Connect. I engaged with our contacts at Fund Connect, and I mean their data analysts went through a very similar kind of overview, I suppose, of the process that you've all seen here today. Explained the asset categorization process, sub and super categories, and any additional flags that we could add to our funds. Kind of laid out the requirements of classification, which in essence was just to deliver holdings files at regular intervals. So after meeting with them and having a very productive catch up with them, I delivered the requisite holdings for the funds that we were looking to classify. We were looking at client queries and where the greatest volume of client queries were coming in, because we wanted to target our classification and break it down into tranches. So at that point, we made a decision to target all of the sub funds within our SciCav and ICav ranges, and this was in, I think, mid to late 2020 approximately. So yeah, engaged with Fund Connect, delivered the requisite holdings, and within a very short period of time, it's quite a long time ago now, 2020 it feels like anyway, but I would say within less than 2 weeks, maybe a week to 2 weeks, we had a full suite of classifications for all of our SciCav and ICav sub funds. I then took these classifications back to our head of product, the product team, and to the specific investment specialists for agreement, achieving consensus and sign off. And I think, as somebody else has mentioned, this really was the most labor intensive part of the entire process. The coordination between the various investment specialists, having achieving that consensus between everyone within the product team to sign off the classifications. I think we had a healthy mix of indicative and verified classifications, but and there were very, very, very few instances where we had any need to challenge any of the classifications that were given. But in that small handful, I think it was maybe, you could say maybe 3 sub funds out of possibly 100 plus, where we wanted to challenge and query the classification that had been provided. But in those instances, the Fund Connect EFC team were very helpful and very amenable. So, I mean, the sign-off process maybe took a couple of weeks longer after that full suite of classifications had been delivered. So within a month, we'd delivered holdings, received classifications, signed them off, and once we agreed and communicated that to the EFC team at Fund Connect, our classifications were published on the EFAMA portal. So that was the first tranche, and then the second tranche was actually our ETF range. So again, similar process on our side. The product strategy and development, looking after the ETFs, approached us, said they wanted to classify the ETFs under the range. That again, they were seeing more client queries about the fact that they couldn't see our ETFs within the EFAMA universe. So yeah, and mechanically, the process was no different to the non-ETF classification process. Deliver the holdings, receive the indicative and verified classifications, run it through the relevant investment specialists, achieve consensus, and sign off. However, the main difference at this point was actually that Fund Connect had been fully integrated into the fundinfo family. So I'd been involved at different points of the merger. So I'd seen the kind of the evolution of the relationship between us and Fund Connect, and then subsequently fundinfo in terms of being our key data partner, our key data vendor. But the transition was seamless. I'd also had extensive interactions with fundinfo from managing our open funds deliveries to clients. So I had some really good contacts there, and everyone from Fund Connect eventually transitioned over to fundinfo as well. So like I said, the transition was seamless, and in terms of the level of service that was provided, it was fantastic. It was second to none. So yeah, overall, in terms of operationally and mechanically, a very easy process to put into place, and the guys at fundinfo are very, very helpful, very amenable. They're keen to talk to you, to understand if you have any concerns, what your concerns are. Make sure you've got the requisite flags attached to your funds. They're categorized appropriately and efficiently. And yeah, I can't speak highly enough of them, and we have a really great relationship with them. In terms of the net outcome, I mean, I can't really talk in a quantitative sense about the impact that classifying our funds under the initiative has had, purely because we don't really track conversion rates with respect to the EFAMA EFC rating. But what I can say conclusively with respect to the EFC classifying our funds under the initiative, and what we've seen subsequently, is we certainly no longer receive any feedback from any clients that our funds are not visible on the portal, obviously because they are all now classified. So we've instantly cut down on a good volume of client queries where they ask us, I can't see X ETF or Y SICAV subfund. We need to see it on there. Can you please ensure that it's classified and uploaded to the portal? We tend to have, because again, I mentioned open funds templates, we enrich our EFC classifications within our open funds templates as well for all of our European domicile funds. We get frequently we get clients requesting that the EFAMA EFC open funds field is populated in their bespoke deliveries. So we certainly get a lot of clients asking for them to be delivered in that. And again, this is, you know, it could be coincidental, but what I will say is over the last 2 years since we've classified our funds under the initiative, like I said, the majority now of our offshore funds, RFP volumes from European clients, particularly for ETF, are at an all-time high at the moment. So we're really seeing huge volumes of RFPs coming in. In the aftermath, again, you could attribute it to it. You might not be able to attribute it to it, but there's definitely, I think, a correlation there with the increased visibility that the EFC initiative affords you, and then clients requesting proposals regarding your funds. So yeah, I mean, in conclusion, I mean, our stance at Elgin is that anything that aims to standardize data, that aims to increase transparency to clients and give that that kind of look through of an asset ecosystem is definitely something that should be supported, and the European Fund Classification Initiative certainly does that. Additionally, it's certainly increased the visibility of our funds to our clients, and if nothing else, it's reduced the amount of queries that we are receiving from clients, queries that we would rather not have, in the sense that your funds are not visible on these venues and these portals. And then finally, fundinfo and obviously Fund Connect previously, but fundinfo are incredibly easy to deal with. They make the classification process as quick and efficient and as low maintenance as is possible, and they're a really knowledgeable and helpful team to work with. So short and sweet from me, I'll leave it there, but yeah, we'll continue to classify. We're looking to expand and classify more of our fund ranges, some of our smaller ranges, but ultimately still European domiciled ranges that clients do ask us about. Again, low volumes of queries, but I think because of how easy it is now, we're going to look to expand and probably just classify every European range that we have now with the guys at fundinfo and EFAMA.
Well, that's great, Rory. Great to hear that you want to classify all of your European fund ranges, and also very interesting to hear about your experience on RFPs as well. Thank you. Now we're going to move to Caroline Polman, who's Head of Content Intelligence at Credit Suisse. Caroline.
Yeah, thank you so much to get the opportunity. 1 second, I want to share my screen. So, perfect. I would like really to use the time to speak about the challenges which we have as a distributor. And as you know, depends on the financial instruments what we have as a distributor. The challenge is always to have the amount of data. And the problems or challenges what we have is we have different kind of data. It starts with the basic data, with the market data, also with the regulatory data. And the distributor has always different kind of sources, so that we are really on the safe side that we get all the data which we need to sell the products to our customers. And quite often, I have no idea why. It could also happen that we have in different kind of internal systems, which are also using different kind of sources and so on and so forth. And as already mentioned from former speakers, the main challenge what we have is data quality and data coverage. and beside other problems. And what we detected, also based on my former experiences, is the information, if a fund is a bond fund or equity fund, is always provided via the instrument type or fund classification. And it comes quite often via the base or reference data. And what we also see when you launch a new fund, it is the challenge to get the data in time. And based on the situation, because we are working on different kind of also data provider, it leads to the fact that data provider has to use the prospectus to open a fund and also to define the information, what kind of fund classification this fund has. And imagine the challenges what the data provider has, and also we as a distributor, is when a fund has a multi-share class architecture. So you are always responsible to ensure that you detect how many share classes the fund has. You have to provide the consistencies and connection of the fund classification and so on and so forth. And it happens quite often due to the outsourcing topic that we receive for one fund with different kind of share classes, different kind of information. So, and to bring also a little bit the distributor view and also the challenge what we have on our side is, I spent a little bit time to check some data or data templates, and we also the former speaker already mentioned the Findatext data template. And as you can see, we have different kind of data templates such EMT, EPT, and ESG template or TPT template. And most of them are using the financial name or the CIC code. So sometimes the CIC code is optional, then in other templates, the CIC code is mandatory. And when we start to check the definition of these standards, you can see here on the very high level under the CIC code, the fund classification. It is divided in 9 parts. And in the middle, you can see this classification on the fund side. And on top of it, on the right side, as already mentioned, the European fund classification, the granularity. When we dive a little bit deeper, then we can also see how they define, as the different kind of codes, how they defined, for instance, equity fund. And you can see it, especially that the CIF code has not really a definition what an equity fund is on their side. What I have also done is, because I worked a long time, or I'm also working with data, I use an external database. And what we can see here is, I use only a name. I checked the database and I checked, okay, which kind of information are provided under the Swiss franc bond fund. You can see it here. We receive the information, it is a bond fund. We receive also the information, hey, under the fund description, that the fund is more or less a bond fund. We also receive in the database information in connection with the CFI code. And then on top, beside the CFI code, we see here also different kind of data provider, which have their own fund classification. You can see here the European fund classification. You can see the European Asian fund market Morningstar classification, and luckywise also the European fund classification. So, and what we can see, and I guess it is quite important also for us as a distributor to make the challenge a little bit visible, we need also a crystal clear information about the fund classification. And it should be in line with all the data attributes which I show, because I think the huge advantage here in this European fund classification is it allows us to make cross checks. Also we can here see, for instance, when we speak about a bond fund, here should never be any kind of equity funds, also with the top 10 holdings, or also with the top 10 companies and something like that. Also I guess this is really important. This is often a challenge for us, because when I prepared the presentation, I used nearly 20 ISINs to check a different kind of database and so on and so forth. And the question is really, sometimes I'm able to find the fund classification, sometimes not, or sometimes it could also happen that the fund classification, which you can see here, are not consistent. And then, of course, the question is, how can I check my data quality on my database in connection with inconsistencies? So, and based on this information, I thought, okay, what should be our recommendation? As already mentioned, we are using more or less, or we are happy in the fund industry that we already have the Open Fund standard and also the Fund XML standard. And Open Fund standard already supports since several years the European fund classification. But when we think about the Findatex templates, I would really recommend that we try to challenge the Findatex side also to put the European fund classification on their templates, because I think this would has a lot of advantages. Because on the one hand, we get the information in an automated way. We can ensure cross checks in our database. And of course, the challenge what we have also as a distributor is maybe we find also a solution that we are able to handle the different kind of fund classifications, which we get from Morningstar, CIC code, CIF code, or 6, etc. And of course, the challenge on our side is really that all the fund classification or different kind of fund classification are in line with each other. And here, as I also provide a short example in the former slide 7, and also here, the huge advantage what I see in connection with European fund classification is really that we can do cross checks also on our database side on the distributor. It's also to avoid inconsistency, as already mentioned, to provide from information to the product and so on and so forth, because everything has a legal impact also on our side as a distributor. That's all from my side. Thank you.
Thank you very much, Caroline. Really interesting to see the process that you go through to kind of cross-check, and an very interesting point about Findatex. So now we're coming to our final speaker before questions, Alessandro Rota, Director of Research at Assogestioni.
Thank you, Miranda. Straight to the point, we as an association have had a local classification of funds since our own inception, since say the mid-80s. I will start with the final end. I mean, as an association, we consider the FC as a complementary system and not as a substitute or an alternative or a competition model with our own local system of classifying funds. And why is that? I'll try to answer this question looking at the similarities between the two models and one key difference that explains why we consider them as a complementary. The similarity between the two models, the European one and the local one, there are many similarities. The first similarity is that the promoter. At the European level, we have the EFAMA, which is the European Association of Fund Providers, Fund Asset Managers. The same is true for the local association that manage the local system. So there is no commercial risk, as many of our colleagues have already been saying. Another key point of similarities between two models is the transparency, and not just referring to the fact that the results are public in the public sphere, but also transparency of the process by which the fund is classified. There are key rules, there are very transparent rules according to which the funds are classified. So there is no sensation of the black box as in many other, there might be the sensation in other commercial system of classified funds. And also another similarity is the portfolio approach. So the classification is made based on the portfolio of the funds. And the last similarity between the two models is that at the high level, there are 5 to 6 macro categories. They have already been talking about equity, balanced or asset allocation funds, bond,
Thank you so much, Alessandro. And I recognize a lot of what you're saying. It's the same at the IA in terms of our classification system being designed for the retail investor, and that being quite a key difference between the EFC. But we're now going to move to Q&A. Thank you very much for all your questions. We'll try and get through as many as we can, but for those that we don't cover, and actually, you know, it's useful to have a summary anyway, but for those that we don't cover, we will respond to you individually, and we'll try and put a summary of the questions and answers on the EFC website. So, but let's kick off. And I'm going to start with a question from the audience. I'm going to kick it over to Thomas Tilley. So to what extent would you say the EFC classification categories differ from those of other providers, for example, Morningstar? Thomas, could you offer a view on that?
Yeah, thanks, Miranda. I think it's a good question. I think actually Alessandro already alluded to the answer. I don't think there is a massive difference in terms of structure of the categories, but the main difference is the transparency you get with the EFC. In often these commercial data providers have sort of a black box on how they actually classify a fund. Whereas in the EFC, you just open the brochure, and if you have a corporate bond, short-term corporate bond fund, you know that 70% of the portfolio is invested in corporate bonds with a maximum of 30% in non-investment grade. If it's a euro short-term, you know that 70% is in euro corporate debt with a maximum duration between 1 and 3 years. So everything is transparent here. That is, to me, the key difference between those two, between us and some of the more commercial data providers.
And I think it's fair to say as well, Morningstar's on a rules-based system, so there isn't that kind of verification process. It's just looking at the holdings data and then automatically assigning a category. So some slight difference there. Thank you very much, Thomas. We do have another question, which I think you may be best placed to answer again, is we've talked a lot about the classification being free at the moment. Is there a commitment to keep it free in the future?
I mean, from the EFAMA side, at least, we are very strongly committed to keeping it free. I think it's crucial for the industry that this is a free process for the industry, by the industry. and I think FE can definitely confirm that. But let's hear Robert there.
Yeah, hi. Thanks, Thomas. Yep, absolutely. The commitment from as the administrator at FE fundinfo is that the process to get classified and receive the classification results will remain free. Absolutely.
That's great. And I think that is something that really does set this classification scheme apart. We've also had a question in about statistical checks. So is there any statistical check, for example, best fit index, style analysis, factor analysis, to be sure that the classification based on holdings is reliable? I think that might be one for FE fundinfo. I'm not sure. Rob, do you want to come in on that?
Yeah, sure. Yeah, I will do. Thanks. The answer is yes. I mentioned that we had a dedicated classification team, and part of their job is I mean, a key focus on quality. So there's a lot of data that we collect that we can compare to the results to make sure that it's accurate, such as market indexes or benchmarks, as the question pointed out here. Also things like comparing the performance within a peer group for R squared correlation and so on, to see outliers, and then, as we mentioned again, looking against the fund's objective and the verified classification on the portfolio. And then everything that we do for the verified is in collaboration with the fund manager or the fund group to agree and align behind the results before publishing them.
That's really useful to hear. And there was a question actually about slides, which I should possibly have answered first. Will the slides be available? Yes, they will be, as will a recording of this webinar as well, if people want to watch on demand or share with their colleagues. So we will be providing that. I'm not sure if we can answer this question immediately, but we have had a question on the percentage of coverage in terms of total European AUM for verified and indicative. I'd be impressed if you have that to hand. So Klaus does know, or he can answer. Let's see which one it is. Klaus.
At least I can try. I saw the question, so I had time to try and dig into it. If we compare to ECB, they cover in their statistics 168,000 share classes, of which we cover 76,000. That's 45%. But ECB does not include UK and Denmark and other non-Euro countries. So if we align to fit that into the classification percentage, then we are on 55%. So it's only half of the ECB. But within the organization, FE, we today run 4 or 5 different systems. So this is compared to only the old EFC system on the Fund Connect. We have knowledge of share classes amounting to 86% of the ECB. And the ones that we have not classified at the moment will be the ones that we start up classifying going forward. So we have a potential to cover 86% right on, and then we will have to dig up the rest.
That gives us something to aim for, doesn't it, Klaus? But I mean, I must say, it was
Yeah.
very clear today the progress that has been made, particularly over the last few years, in increasing that coverage, which is excellent. We are kind of coming to the end of the webinar. Someone has asked for the possibility of seeing a fixed income example. We're not going to have time to do that, but do get in touch with us, or we'll get back to you, because we can kind of take you through some further examples, and we will try and share some of those on the website. We didn't get time to talk about things like using the classification system to produce peer group performance benchmarks. But actually what we'll try and do is answer that question again and post that online in a summary of the Q&A, because I think that's a really interesting question, but probably not possible to cover in 1 minute. So it just remains for me to say thank you very much for tuning in. Please do send in your questions. If you want to get involved, Thomas at the start put up the details of how to get involved in the task force, whether it's getting your fund classified. I'd really like to thank all of our speakers today for their participation and for some really interesting presentations. So have a great weekend. Thank you, everyone.
Thank you all very much.
Thank you.
Thank you. Bye-bye.
Thanks all. Take care. Bye-bye.
Bye.
Bye.